I have a couple comments. The first is that I don't think that resources, despite the fact they've increased in price, are expensive. I think they're still cheap. If you take the price of resources in real terms back to 1980, what you'll find is that resources don't cost more, the dollar buys less. Unfortunately, I think that trend continues. And I think that perhaps savers and investors and voters worldwide will misplace the blame and suggest that the blame lies on increasing commodity prices rather than placing the blame where it correctly lies, which is the legislature debasing the purchasing power of the medium of exchange. Whether or not the world's voters become literate over the next 20 years is a bigger question that I'm capable of answering, but that gives me pause. Looking further, we went through this circumstance before in the decade of the 1970s. If you'll remember Jimmy Carter and Jeremy Rifkin and the Club of Rome and all those morons, they had the same Malthusian argument with resources, and they forgot that markets work. The cure for high prices, Adam, ultimately is high prices. We haven't seen high prices yet, but I think we will. And I think the market will correct. I don't think, as an example, that we have a shortage of $120 oil. I think we have a shortage of $60 oil. And I suspect at $200 oil, if that $200, depending on what the dollar is actually worth, if we had a real $200 oil period for a while, what you'd find is that there's more supplies than we think there are, and we would find a way to drive less. In other words, ultimately, this Malthusian Club of Rome argument is something that might cause us real concern 200 years from now, but I don't think it needs to cause us concern 20 years from now. I do think that we need to understand that food and fuel and energy will return to norm in terms of the wallet share that they enjoy with consumers around the world. Remember that the stuff is really, really, really cheap in historic terms, and it's going to become less cheap. Adam, I need to say that over the last 30 years, I have accurately predicted 17 of the last 3 economic declines. Okay. I have always been afraid of deficit spending. I've always been afraid of the increased politicization of the economy. And I have always underestimated the resiliency of humankind. For most of my life, we cured economic circumstances like the one that we're in today, a liquidity-driven economy, with a good old-fashioned recession. We reset living standards and we reset demand. It would seem that the big thinkers have decided that recessions are illegal, and the voters have decided that the cure for the economy is not more productivity, but rather higher taxes and more laws. We'll see if that continues to work. A different circumstance is that it would seem that since I've been cognizant, which has been maybe 50 years, that every 10 years or so, we've had a crisis in confidence and we've had a liquidity squeeze. 2008 comes to mind. And I'm very concerned that if you normalize natural resource prices at the same time that you continue to increase the cost of government, that people's real living standards fall to the extent that we have a demand-driven recession. In other words, people run out of confidence and people run out of money. I hope that's not the case. I hope that we're globalized enough that the increase in education and the increase in productivity from younger workers in places like Nigeria and Indonesia float us old, fat, bald white people. And I hope that the ascent of humankind, that the ascent of the bottom half of humanity generates enough economic utility, like the rise of China did, that we get through this. But I have my doubts. Oil and gas in the 3 to 5 year time frame is a no-brainer. The oil companies are discounting probably $60 crude, and in the US, they're discounting probably $2.50 natural gas prices in a circumstance where the prices are $130 and $5.50 respectively. The oil price can fall and the oil companies are still cheap. That doesn't mean that if we have a resolution, a political resolution of the problem in the Ukraine, that the oil price can't fall, and that near term, the price of the oil stocks doesn't fall. I'm not talking about the direction of stock prices in the near term. What I'm saying is that the big energy producers, the Exxons of the world, the Chevrons of the world, as an example, the Occidental Petroleums of the world, the people that control a lot of non-Russian production are cheap on a net present value basis. And people should buy them. It doesn't mean that the share price 6 months from now will be higher or lower than it is today. It means that the companies are worth substantially more than they're selling for today, unless the oil price falls by half, which I think is unlikely. I laugh because my track record with regards to service providers has not been as good as it has been around the oil and gas industry. I suspect that we're going to come back into a capital spending cycle in oil and gas. Right now, the higher oil and gas prices have not led to a dramatic increase in capacity expansions among the oil and gas business. Their cost of capital has risen as a consequence of the carbon furor worldwide. It seems that the banks listen more to Angela Merkel, Joe Biden, and Greta Thunberg than they do to oil and gas economists. And if we come back into a spending cycle for oil and gas, one would expect the Schlumbergers and the Halliburtons to do very, very well. I'm not looking for a secondary leverage play. For me, I'll make enough money in Exxon and Chevron that I don't need to be smart enough to own Schlumberger. For people who are a bit smarter than me, and mercifully there's a lot of them, if demand for oil and gas leads to an increased spending cycle in oil and gas, if we decide that we need to replace Russian production, then the service company should do extraordinarily well. I hope the world's consumers say to the world's big thinkers, give your head a shake. Despite the fact that coal is unpopular, the fourth best performing commodity in 2021 was coal. The largest sales volume year on record for coal was 2021. The truth is that this transition to the carbon-free energy future may occur in 2050, 2060. But to get from here to there, we require carbon-based fuel. There's no way around it. I'm not advocating pumping more crap into the sky and pumping more crap into the water. What I am saying is that maintaining our current standard of living for 30 years requires fossil fuels. And that's before you lift the bottom half of humanity up to a standard that is higher than abject poverty. Do we need more solar power? Yes. Do we need more wind power? Yes. Do we need more geothermal? Yes. Do we need more hydro? Yes. Yes to all of them, all of that. We don't need solar in Germany where the sun doesn't shine. We need solar in India. We don't need solar at night. We need batteries or oil and gas at night. We need to have a realistic, pragmatic view of the requirements of humankind relative to the ability of various energy sources to supply it. And right now, irrespective of the narrative, that's done, particularly with transportation, with carbon. Uranium worldwide sells for less than the cost of production. I think there's going to be lots of demand for oil, but oil at 130 is selling for twice the median average cost of production. Uranium right now is selling for $50 a pound, and the International Energy Agency suggests it costs $60 a pound to make it. So the world, fully looted, is producing 60 million pounds of uranium and losing $10 a pound a year doing it. Rather boring. The price of uranium has to go up, or else the supply of uranium goes away. And if the supply of uranium goes away, the lights go out. So your listeners need to ask themselves, what is a more logical conclusion? Will the price of uranium go up, or will the lights go out? Because that's the question. I think the answer is fairly clear. Two, the incentive price to produce a pound of uranium is going up rapidly because of inflation in the supply chain and because of social rents, which is to say taxation and taxes, and also regulation around the world. So when we talk about a market clearing price of uranium at $60, that's a 2021 number. The market clearing price for uranium in 2024 is probably $75 a pound. I think it's inevitable that the price of uranium goes from $50 a pound to $75 a pound, a 50% increase from here in the 2 to 3 year time frame. And I think that there's a substantial chance that the price of uranium overshoots, because even if the price of uranium goes to the market clearing price, it's a capital intensive business with very long permitting times. And you can't just add supply with the flip of a switch. It could be 10 years before we impact supply.